Hello, how you doing? You're welcome once again to the World of Mind channel. Wow, I'm Abie Johnson, a regular host on this channel. I want to welcome every one of you once again, those who have been on this channel, or if you're new to this channel, very big welcome to this channel. The World of Mind channel is a hub where you get education on how to grow your income, basically on the online space. So we'll be continuing from where we stopped in our last session. We're still on the beginner's guide to becoming a good Forex trader, to becoming a good trader. As we said in our former classes, most of the skills, most of the things you learn in this beginner's guide, you could apply it to all forms of trading, whether you want to trade stocks, futures, cryptocurrencies, or Forex, whatsoever commodity. They are basically same principles, especially as a beginner. So this beginner's course is very, very good for everyone who want to have a career path in trading, becoming a trader, to just go through all of our courses. Wow. We're giving lots and lots of exciting content. We'll just do a quick recap of all we've covered. We looked at the different sides of trading, the technical side, the fundamental side, where we talked about charts for the technical, for the fundamental, we talked about news, and then we went on to discuss trading, understanding the charts. We went on to discuss how to use the trading view panel. I always like analyzing using the trading view, then going to your MT4 to take the trades. It's easier for me that way. For some persons, they just love doing the analysis on their MT4 platform and then take the trade on their MT4 platform as well. But I prefer keeping things simple. You analyze, make your analysis on the trading view, and then you go down to your MT4 and take the trade. We learned that history always repeats itself. This is the number one thing you must know as a technical analyst. You want to check out for previous price actions, what has happened before in the past. You want to take note of those things because history always repeats itself when it comes to trading. We looked at understanding candlesticks. As a technical analyst, you want to understand how the candlesticks work because it's basically price action. Price action, that's what determines the market. Indicators are good. There are several persons who rely so much on their indicators. They are good, but they always have their limitations. It's best you understand price action, naked Forex, understand how the candlesticks work, and then indicators are just there to give you confirmations before taking up the trade. So in our subsequent sessions, we'll look at several indicators you can add up, you could use in your trading, depending on the trading strategy you want to go with, and some indicators you would just avoid completely because they are completely rubbish. I've been trading for quite some time now, and I've used a number of indicators while I started, which is common for most traders. At the beginning, you want to move from one strategy to another. You learn here, and you just see that you're making a whole mess of yourself. But we'll look a little bit about indicators. But before going into indicators, understand the price action, understand how the candlesticks works. So we've covered the basics on candlesticks. We looked at reversal candlesticks, told us generally candlesticks, you have the bullish candles, you have the bearish candles, which just signifies if the trend is going upwards or if it's going downward. Bullish candle means price ends higher than where it started. Bearish, price ends lower than where it started. We looked at several reversal candlesticks, the engulfing candlesticks, the hammer, the dodges, all of that. The TWIZZERS. You can just go back to all of these and see how well to refresh on your memory, because today we'll be going live into the trading view platform, and we'll see how the market plays out real time. So we'll see and understand these candlesticks real time. So that's what we want to do right now, understanding the candlesticks real time, and all of these different types of candlesticks. We'll see how to identify them in the market. So right now, if you are not yet subscribed to this channel, you could see we give lots of stuff. No hype. We are not here to talk about how much one makes and all of that. If you are here to come and look out for Ferraris or Lamborghinis, you won't get them. No hype, all educational. Everything we are doing on this channel about the beginner's course, just purely on educational basis. We want to give you the basics on how to become profitable. So lots of stuff. So I think this will be the right time. If you're here to subscribe, just hit the subscribe button and subscribe to this channel. Also, you could share this video on your page. Share this video, subscribe to this channel, and get regular updates on all that we are doing right here. So straight away we'll go into what we have for today. I'll be opening the trading view platform right now, and then we'll see the market. All right, so this is the trading view platform. Once you open your trading view platform, you go to your charts. You have the charts. This is just a typical chart. Over here we have, this is GBP, JPY. You could search for any currency symbol, any currency pair you want to analyze. You could come here to the add symbol and you just click on it. We've covered this in our previous video on understanding how to use the trading view platform. So you could type in whatever currency pair you want to work with. I said for starters, always see how to walk around the major currency pairs. Like you have USD, JPY, that's USD Japan, GBP USD, Euro USD. Those are the major currency pairs. So let's look at USD JPY over here. This is it. Now on the time frame, now each of these we are looking at here, remember we talked about candlesticks. So what you're seeing here, these are the different candlesticks. The green bars here, I arranged my colors to be the green for bullish, and the red is the bearish candles. Remember I told you bullish. One thing you just know is that the bullish, where the market is moving upwards, bearish when the market is coming downwards. So you see this candle bullish, the green candle upward, price ends higher than where it started. Whereas for bearish, the price closes lower than where it started. So just looking at these, you're seeing different candles here, different candles. So we want to look at these and see how to identify reversal candles. Now this is the time frame here. We're looking at 1 hour. You can always change your time frame. You could look at the daily. This is the daily, for instance. You have this here, the daily. You could look out for either a 4 hours chart, all of that, the 4 hours chart, and there you have it. So different candlestick patterns, different candles, different time frames as well. So same thing, we will check out for GBP USD. We have it here. There's the market and all of that. So basically right now let's look at USD JPY. Let's use this to analyze, and the principles are the same. The principles are the same. We could use these principles for mainly, even if we are looking out for a smaller time frame, for something as little as the 5 minutes time frame. This principle still works. For something as low as the 5 minutes time frame, it still works. You can go up to the 1 hour time frame, the 5 hour, the 4 hour time frame, the daily, the weekly, and all, and so on and so forth. So basically, let's work with 1 hour, the 1 hour time frame, USD JPY. So we are looking out for, let's spot out some of those candlesticks that we talked about. Now for you to identify a trend, mainly once you have candles moving in same direction, you have more than 4 candles moving in same direction, then you can identify, you can say this is a trend. Like we have this here now, you see these bullish candles, you have 1, 2, 3, 4, 5 bullish candles all in same direction. You could say we have a trend. Same thing, this can be a downward trend. You have 1, 2, 3, 4 candles, you have a trend. So identifying a trend when you have more than 4 solid candles moving in same direction, then you could say you spot a trend. So we are looking out for a typical reversal candle. This right here is close to a reversal candle, but something much more prolific in this chart, looking at it here, is this candle. You could see this is a downward trend, a bearish trend. The market has been bearish for how many hours? This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. For about 12 hours, the market was bearish, coming down steadily. And here you just have this strong bullish candle. You see this strong bullish candle, it comes up here very strong bullish. This signifies the end of this downward trend. Now this candle very strong. We could see what happened to the next candle, although it was not a very solid one, but the market still ranged a little bit and went above. Now this is just a typical example. This was not a very solid example to use, but I'm just trying to show you what we call the reversal candles. This here is an example of a bullish engulfing. You have a downward trend and you have a strong bullish candle that completely engulf the previous candle. Let's look out for other examples. Example of an engulfing. Now let's look out for another setup here. Now you see this is a trend. You see the market, it's trending upwards. You have these bullish candles, strong bullish candles upwards, and then by the end of it here you see this long wick and a short body. This is a typical example of an inverted hammer or an overhang. Now once we see this, remember we said seeing an overhang or doji at the top of a trend, any of these doji candles or hammer or all of that, it shows you that okay, the market is getting a little bit weak and the trend wants to reverse, but we'll always wait for a confirmation candle after that. So immediately after this we saw the confirmation, which was a bullish candle, and we say okay, wow, that's good, so it is now time to take up this trade. Now we look at that, it's moved downwards a little bit for some time before it now continued upward. So this is a typical, these are just different signs of how to point out these reversal candles. We look out for them always at the end of the trend. You must have a visible trend before you take up a trade. Now let's see if we can spot out some other of those reversal candles. Alright, we see it playing out here again. You see this trend going upwards, goes upward, and this is a bullish trend. Look at the solid bullish candles, each of them here very solid, no much wicks, strong full body, and all of a sudden you just see a strong bearish candle. You see this candle here completely engulfs this candle. You see how strong it is, almost twice the size of the previous candle before it. So this here shows that there is no more buying power. The buying power is so is weak right now. You just have lots of sellers here. There is a massive sell-off here, and the price quickly just comes down. This shows us that okay, we could enter for a trade immediately after this, and you see the market came down a little bit for some pips. It moves down from here for several hours till it got down here, and then it's now ranged a bit and moved upward. So these are just example of how we spot out our reversal candle. So this is a typical example of a bearish engulfing candle. Now this is a typical example of a tweezer bottom. Now we could see this is a downward trend, and you just see this candle here. You have a bullish candle that is just similar, almost identical to the bearish candle before it. This shows us an end of this downward trend, and we want to have a bullish candle. You can see this solid bullish candle immediately after that tweezer. So this is also an indication of a tweezer. Let me look out for another tweezer that will be very, very clear for you to understand. Alright, right here we could see a couple of examples of tweezer tops. You could see here you have this trend. It's an upward trend for bullish candles, and just at the end of this candle you see a bearish candle, just similar, same, equal in length, both the wick at the top, the wick below, equal in length with this. You see it here. This just shows you a typical example of a tweezer bottom, a tweezer top. This signifies the end of this bullish trend, and it starts up a bearish trend. You can see you have 3 or 4 other bearish candles immediately after that. Same thing happened here. You could see this point here. This is a bullish trend, and we have just a similar candle like the previous one, bearish, and it goes down. We could see another example here. This is an upward trend, and just at the top of the trend we have a similar candle, same in length, same. That's it. You see it here. This is a typical example of a tweezer bottom, or a tweezer top rather. You have this upward trend, and you have this bearish candle, almost exactly like this, and that just shows you the end of this trend. Same thing happens here. This is a tweezer bottom. You see this like a downward trend. This trend began here. It has come down a bit once it got to this point. You have this candle, a bullish candle, which it's just similar to this. This shows you the beginning of another trend, a bullish trend. So there you have it. We've looked at the engulfing candles. We've looked at the this is one. Here we have another. All of these are just the tweezers. Here we have this. We've looked out for tweezers. We've looked out for engulfing. We've looked out for the dodges. We saw an overhang and then a confirmation candle. So all of those are reversal candles. So when you open your chart, you can easily spot out these reversal candles and see how to make sound logical decisions when placing your trades. You want to spot out those areas of possible reversals. Now, in our subsequent video, we'll be looking at what are those key zones where these reversals are prone to happen. So even before they happen, you will be anticipating them. We have those key blocks. Key blocks you'll be looking out for. They can refer to them as the supply and the demand zones, the support and the resistance zones, where these reversals are prone to happen. So even before these candles appear there, you know that okay, within this zone I'm expecting a reversal to occur. So you know, mainly in Forex, all you're looking out for is just to improve your odds for success. So you want to see different things should confirm before you go in to those trades. So it's not just enough you've seen a reversal candle, no. But if you have, you know that this zone, this is a possible area for reversal, and then you have a confirmation, you see the reversal candle build up, then you have some indicators that you could look out to also help in giving you those confirmations. So when all of these things align, then it increases your odds and your chances for success. So friends, that's it. We've seen how to spot out these reversal candles when we trade. So when we trade, we want to see how all of these will be to our advantage. So thank you for tuning in. Stay tuned for the next video, how to identify those supply and demand zones. Once again, if you're yet to subscribe to this channel, you could just hit on the subscribe button. We are a family. We share lots of stuffs. We'll learn together. Also, drop your comments below. If you've already started putting all of these we are sharing here to use, I want you to talk back to me. Drop your comments and let's share our ideas. Let's see how well you've benefited from any of these teachings. So thank you once again, and always remember, you can make it. Once you put your mind to it, you can always achieve whatsoever you set your mind to achieve. So thanks once again, and remain blessed. Cheers.